Hello and welcome back to the Rekt Capital channel. Welcome to today's video update about the crypto market. We're going to be looking at Bitcoin specifically. Let's dive right into the video. I hope you're having a wonderful day. Today we're going to be focusing first and foremost on the Bitcoin investor tool. This is the 2-year moving average multiplier. We're just watching for this wedging structure. Nothing has really changed since the last video, aside from the fact that we're actually seeing a lower high relative to this black diagonal resistance. This black diagonal resistance is of course a very key reference point for this wedging structure, because if we see a breakout past this level, then we're probably going to see a revisit or at least an initial test of the 2-year moving average resistance. But at the moment, all I'm looking for on this chart is either a lower high, which we're getting at the moment, or revisiting this black diagonal as a distribution zone. But at the moment we're seeing a lower high, and just like I was talking about in the previous video, we might be seeing a head and shoulders in the works. At the moment, this right shoulder is still in the process of forming. And I'm going to show you my personal, more complex TA in just a moment. But before we dive into that, the cryptocurrency technical analysis course that I've created and structured for you guys recently got another 5-star review, which I am really pumped about. This is a course that you can use not only to improve yourself as a trader and investor and understand the market psychology as well as what price is doing at certain points in time, but it's also a very good way to support the channel if you'd like. So feel free to visit the link in the description down below. Here's my TA on Bitcoin at the moment. Just to accommodate for this head and shoulders idea, I've just circled these 3 tops, and at the moment we are seeing a rejection from this point right over here. So that's the 6,500 mark. And this orange diagonal over here, this orange trend line, is going to be a very important reference point in terms of validating that structure. So if we indeed see rejection from here and price revisits this level over here, a breakdown from here would probably lead us to that major low that I've been speaking about, which is still very much on the cards. Nothing really has changed in terms of my short-term bias. So this is what I'm going to be watching for. I'm going to be watching for this trend line in the short term, because once we see this continuation on the rejection, then this is a level that I'll be watching for in terms of what could happen next to Bitcoin. Because as history suggests, we tend to see a breakdown from the 2-year moving average, which is in this case 7,200, and then we see a recovery just to test this moving average as a resistance. But also sometimes we don't reach that moving average to actually reach that picture perfect resistance rejection. In fact, we sometimes see wicking towards the upside and rejection from an area that is around that resistance. So we are seeing history repeat itself in terms of these rejections, and if you'd like to learn a bit more about those, check out the video in the top right hand corner. This is a tweet that I've posted about the fear and greed index recently, that it is no stranger to consolidating within the extremely fearful level. And as you can see, we are around the 10, 12, 15 level, and we've been that way for a while, as this consolidation over here represents. This green area is essentially the extremely fearful level. And every time we've seen prolonged consolidation here, it's lasted over a month, around a month, or even just a bit above a month. So if we bear these consolidation periods in mind, these long consolidation periods, then based on this and trying to extrapolate this sort of tendency, we won't see stronger rallies in Bitcoin until around mid-April, around the 10th of April, roughly speaking. And based on Bitcoin's price action, there isn't anything at the moment that would show that we're going to be extremely bullish in the short term. And when we take a look at the amount of time that it takes to mine a block on the Bitcoin blockchain, then we're seeing a retrace from all-time highs, and these reversals over here tend to precede reversals in Bitcoin's price action. And we've seen a reversal in Bitcoin's price action most recently. We've seen that initial rejection, right? We've seen the very beginnings of that happening, but I still feel that we might still see some additional downside as the amount of time that it takes to mine a block returns to this average 10-minute region, because mining a block was at 12.5 minutes before, but now it's returning to the 10-minute region, which is something that I was talking about recently and we're indeed getting as time is passing. But the fact that we're seeing a decline in the amount of time that it takes to mine a block, that means that miner revenue is going up. The blockchain is becoming more efficient. So this is actually a good thing for miners, because we're seeing profitability in terms of miner revenue. That's a very good sign. But the fact that we're seeing that miner revenue increase and the amount of time that it takes to mine a block decrease as a result of that increased efficiency on the Bitcoin blockchain, that's all to do with the fact that we've seen a decline in difficulty. We've seen that major drop in difficulty, and as you guys know, as I've been speaking here on the channel for a while now, these drops in difficulty tend to precede drops in Bitcoin's price action, and we've seen this over here. And we've seen it over here as well. If you just look at the black lines for Bitcoin's price action, we tend to see Bitcoin's price follow these difficulty adjustments. So that's something I'm also looking at. This is something to bear in mind because these are more macro views, right? But we tend to get lost in the short-term fluctuations of price, but all the short-term is doing is distracting you from the longer time frame, from the bigger picture. And if we just see at the tendencies that we see in these difficulty adjustments, we can't ignore that. We can't ignore that no matter if we see these little fluctuations in short-term price action for Bitcoin. Those are going to distract you from the macro picture. We can't ignore these sort of tendencies and these sort of things aligning at the same time, suggesting that there is still some scope to see lower prices for Bitcoin before we actually reverse. And this actually ties in with the 200 weekly moving average. This is an analysis that I did recently in the previous video, so check it out if you haven't seen it yet. Essentially speaking, we're going to see Bitcoin behave around this region, around the 200 weekly moving average, as we've seen on multiple occasions in the past before. But of course, there are many nuances to how Bitcoin behaves relative to this weekly moving average, so check out the video if you haven't seen it for more details. But in any case, most recently, one of the major things that have happened in terms of Bitcoin's price action is the monthly close. So this is the demand area that we've been talking about for a while now. This is a historically relevant demand area, and just look at how Bitcoin has been respecting this overall market structure, this triangular market structure. A capitulation wick to around this level right over here. The monthly close managed to close above this green demand zone, which is a very positive sign. This demand zone means that we're still seeing some buy interest, we're still seeing buyers want to prop price up past this area, but that doesn't necessarily mean that we won't see a wick, a brief revisit below this area, just to tap that additional liquidity, just to search for additional buy support at around these levels. And if we look at the quarterly, because of course we've seen the quarterly close as well, the quarterly candle. This candle is the quarterly candle that we've seen recently close, and we're just seeing a lot of volatility relative to this triangular market structure. You can see that this entire triangle has been touched from both sides. We've seen a lot of volatility here, and if we just want to interpret this candle, we can say that it's a doji, so essentially a spinning top, which signals uncertainty in the market, and we've definitely seen a lot of uncertainty. But these sort of candles, these uncertainty spinning top candles, they never are this volatile. They are very small in their volatility, so this is an outlier spinning top candle. But in any case, they do tend to precede reversal, and what I'm thinking here is, of course, another major low could be on the cards, and there is a lot of on-chain evidence to suggest that, and as well just the price action on lower timeframes for Bitcoin. But in any case, this isn't necessarily a bad thing, what we're seeing on the 3-month chart over here. We might be seeing that sell side pressure exhausting in the short term, but overall we are seeing a curling up in the Bitcoin price action on the 3-monthly. So you can see how each candle on this chart going forward, every time it's going to close, we're going to see an additional curling up in Bitcoin's price action. So wicking to the downside could definitely happen. It is definitely a possibility that we'll see some wicking towards the downside, but ultimately we might be in this curling up pattern, which if you just think about these next few 3-month candles, this could take until the rest of the year. We could still see this sort of curling up materialize all the way until the end of 2020. And just bearing this in mind, you can understand what the macro perspective is going forward and what we can expect from Bitcoin in the next few months. So like I've been speaking about, in the short term, it's okay to look at Bitcoin and see that you might be a bit bearish, that the on-chain evidence is suggesting that to be the case, that we could see a bit more downside, that we could see an additional major low. But at the same time, we have to bear in mind that this is painting a very bullish structure in the long run for the next coming months. And just based on this structure, this sort of wicking below this green area to lower price regions, that could be those wicks, whether that's just one wick or whether that's a few, those wicks could be the last opportunities to accumulate Bitcoin at these lower price levels before we actually see this sort of curling up materialize and finally break out from this black diagonal resistance to restart the bull market in the new year in 2021. And that makes sense with all of this global uncertainty at the moment, with also fears of a recession. It's understandable that Bitcoin won't necessarily have a catalyst to really outperform all other things. So if we just look at Q1, you can see that over the past few years, Bitcoin doesn't tend to do quite well in those first quarters of the year. But when we look at Q2, there's a bigger chance. The probability is skewing to the fact that we might see a very positive quarter this quarter, because Q2 tends to produce some rallies towards the upside. And this may definitely tie in with the fact that we might be seeing curling up on the quarterly time frame for Bitcoin. But in any case, guys, if we just look at the stock to flow model, we're also seeing this sort of deviation from the actual stock to flow over here. But overall, if we just look at these volatility bands to just accommodate for these fluctuations, these extreme fluctuations, whether that's extreme fear towards the downside or extreme euphoria towards the upside, this is still very much on pace to respecting this model. So this extreme price action in Bitcoin still means that we are within the bands of the stock to flow model, and we are still respecting this model very well. So on a macro scale, there is reason to be bullish, but on the short term, we just have to try and position ourselves properly so as to benefit from what is yet to come for Bitcoin in the future. And very briefly about altcoins before we wrap up today's episode, we are seeing this successful retesting of the top of the ascending triangle, which is very positive for altcoins. This is very promising for altcoins that they're respecting the top of this ascending triangle. We've seen a bit of volatility this week already, but that's okay. We are seeing price strength confirmation in terms of this index relative to this ascending triangle. So altcoins do hold a promising future, most likely after the halving. And of course, Dogecoin over here, the ascending triangle, we are probably going to see a pullback towards the higher low right over here, but we are still seeing that Dogecoin is respecting its market structure, which is very positive for altcoins. So far, so good for altcoins as we approach the halving. And that's just about it for today's video. Thank you so much for watching today. Please consider dropping a like if you liked the video. Subscribe for more videos like this in the future. I'm Rekt Capital, and I'll see you in the next one. Speak to you soon.